What's going on, everybody? Welcome back to another video here. We have a lot to discuss as we are getting into what is most likely going to be yet another absolutely crazy week in the market after we just had a very crazy week in the market here. So we're going to be going over all of the most relevant pieces of news as it relates to the big picture of the broad market, some of the more recent updates of the government shutdown and the employment situation, and some of the cracks that we are seeing in the labor market. And as always, we're going to be covering some of your guys' favorite names here: Neo, Palantir, Sofi, and Hims, going over the most up-to-date and relevant pieces of news, as well as the charts in the short term here, so that you guys have a better idea of what to expect next. So before we get into all of that information, everybody, if you guys do enjoy the information and analysis that I provide for you guys in this video here, make sure you go down and hit that like button. It costs you nothing to do it, but helps me out a whole lot in spreading this information out to as many people who actually want to learn. And again, if you're not subscribed yet, make sure you guys are, and turn on notifications so you're notified every time these videos do end up getting posted live. And as always, massive shout out to all of the members of my private trading and investing community, Less Trades, More Profits. I'm going to throw up some of the gain screenshots on the screen here, guys. Even in these crazy market times, I am still handing out the absolute best trades in the market to everybody. That 800% Rivian trade. We had MDB crushing it for us this week. We have FedEx looking great. Again, guys, even after the period over 3 months there where I handed out 32 10x trades, I mean, even in this period where it really makes a whole lot of sense to really touch nothing or size down a little bit, again, the systems and strategies that we use are going to carry us through any market environment. And again, the whole point of the group is making sure that you guys have the skills that you need to have long-term success in the market and become self-sustainable. So if you guys are interested in hopping in there with us and becoming one of the next great success stories, make sure you guys check out that link down below. Use code November to get 50% off your first month, but don't wait, because at the end of November, prices for LTMP are going to be increasing. But if you join before then, you're able to lock in the lower rate and never have the price raised on you. So without further ado, let's get into it over here. So with all of the craziness that we have seen in the market over the last couple of weeks here, we are now at this extreme fear level on the fear and greed index. Now, one of the things that I kind of want to point out to you guys here is that, yes, we have seen a little bit of a drawdown in the market here, but looking at ES, again, this isn't necessarily extreme fear territory, in my opinion, when we're only about 3% off of all-time highs. But again, when you start to see things like, ooh, government shutdown, maybe we're not going to be getting rate cuts because the Federal Reserve is not receiving the data here. We have no inflation data. We see the market acting very volatile, and that is driving this fear in a little bit of a vicious cycle, or a little bit of one of those like self-fulfilling prophecies. So with that situation with the government shutdown, we do actually have a couple of interesting updates here. The first is that on Friday, we did see Chuck Schumer offer a new plan to Republicans that would allow the U.S. government to reopen after a shutdown that began on October 1st. And this really is going to hinge on protecting Enhanced Affordable Care Act subsidies for at least 1 year. So, this is a comment from Lindsey Graham here. I find Senator Schumer's demands ridiculous and equivalent to political hostage taking to continue bad policy. This is the most important part. We should not be made to continue flooding health insurance companies with taxpayer dollars under Obamacare as the price to open up the government. That is effectively what they're debating here with these ACA subsidies. And then today, we also saw this announcement from Donald Trump on Truth Social. I am recommending to Senate Republicans that the hundreds of billions of dollars currently being sent to money-sucking insurance companies in order to save the bad healthcare provided by Obamacare be sent directly to the people so that they can purchase their own much better healthcare and have money left over. In other words, take from the big bad insurance companies, give it to the people, and terminate per dollar spent the worst healthcare anywhere in the world, Obamacare. Unrelated, we must still terminate the filibuster. So again, we could easily see a move down in healthcare stocks coming in on Monday. And again, this is something that I've talked about a lot, especially as it relates to United Healthcare stock. I obviously, you guys all know, one of the 32 10x trades that I gave out in the last 3 months was on United Healthcare on the breakout above 316. But personally, for me, I'm not really bullish on the healthcare space here. Again, people are struggling. Healthcare is very expensive. And in order for these healthcare companies to continue to grow, well, again, the prices of healthcare probably would have to go up in order for that to happen. And I just don't think that's realistic at this current time. And now that we are seeing things like this, again, healthcare and health insurance is kind of where we want to be staying away from in the short term here. So again, we do have some developments here. Nothing yet that is going to really show us that they are fully ready to end this government shutdown, and we are still seeing this political posturing going back and forth. Now, before we start talking a little bit about some of these individual names here, I do want to talk briefly about this data situation that we are seeing that is one of the adverse effects of the government being shut down. And market participants such as ourselves and the Federal Reserve and key economists are not able to see a lot of the economic data that they need in order to get a good picture of where the economy is to then go out and make their own decisions on what to do with rates come December here. But when we take a look at this metric here, unemployment rate proxy revised up, recent estimates from the Chicago Fed have seen consecutive increases in the unemployment rate on the advanced and final side. So what has the Fed told us is going to be their main focus going forward here? And what have we been talking a lot about on this channel? Well, they're going to be a lot more focused on the labor market than they are inflation, because they have told us that they're okay with letting inflation run a little bit above target in the short and medium term here, as long as growth is not sacrificed. And one of the best ways to determine whether or not economic growth is going to continue or if it's going to slow down was obviously the labor market. And we have not seen good labor market data recently at all. We talked about this in a prior video. We saw one of the worst private payroll reports in like the last 22 years. And if that is the case, that this labor market continues to weaken and eventually we get a little bit of some of this inflation data that says, let's say that we're in line with expectations or maybe even a little bit lower than expectations, that would suggest that another rate cut is coming in December. But what I want you guys to take away from those comments from Powell and a lot of the other FOMC speakers, when they say, oh, they don't know if they're going to be cutting in December, it's not saying, oh, based on the data, we don't know if we're going to be cutting in December. It's saying, oh, we don't have all of the data that we would typically like to see, so we don't necessarily know if we are going to be cutting or not. It has really no relation to what the data actually is. Now, if they were just going off of the employment data with what we have been seeing over the last kind of 3 or 4 weeks here, again, it does suggest that they are still going to be cutting in December. And again, this period here in these statements are one of the key driving factors that is increasing the fear levels and uncertainty levels across the market. But I'm here to tell you, again, just kind of take a realistic look at this situation and understand what is actually going on and what is actually being said by these members of the Federal Reserve. So let's move on to some of these individual names here. The first one that I want to talk about with you guys is NEO. So this is the weekly chart here. I want to briefly touch on the daily here and do a little bit of bad news first, good news later. So the daily chart on NEO was looking relatively good over the last few weeks here, starting to hold and consolidate right on top of this daily 10 exponential moving average. But when we saw that market volatility on Friday, it ended up losing that kind of short-term uptrend here and moving back to the downside. If we were just looking at this daily chart here, I would be relatively bearish on NEO in the short term as we head into earnings over the next few weeks here. But the main and most important look on this chart that we have been talking about a lot over the last really kind of 2 months here is this weekly time frame. This breakout here that we saw right around that $5 area on NEO was, again, another one of those big 10x trades that I handed out to the LTMP group. And we are starting to see that type of setup forming again. Now, again, this isn't necessarily one that I would want to trade to the upside going into earnings. And again, it's not a perfect setup here. But what I would say is NEO is still stair-stepping to the upside, which is definitely what you want to be seeing out of a name such as this. But like I always say, when we are talking about NEO, it is always going to come down to whether or not they are able to deliver on the promises that they have outlined to shareholders over the last few years, and that is hitting those profitability metrics. The first time that we could get that positive news would be sometime in the first and second quarter of 2026 when they are reporting Q4 earnings here. So the next thing, again, we do have a little bit of positive news for NEO here as well. NEO Firefly ships large batch of cars to Europe, overseas expansion to include North America. Again, seeing them continuing to take these expansionary efforts is obviously a very positive sign for NEO moving forward. It increasing kind of what I like to call their theoretical addressable market here. Then moving on to Palantir. So this chart, again, there's really not a whole lot to do with Palantir in the short term here. Again, they reported very, very solid earnings, but like I have said a lot of times in the past, the market is going to start holding this name to a little bit more of a higher standard. And what I will say here too, and I know this is not going to be something that a lot of you guys want to hear, do not fall into these echo chambers. Do not fall into this groupthink cult mentality that retail investors love to fall into as it relates to the stock market, especially after the CEO is making statements like this. Palantir stock dumped 11% this week after the company's third quarter earnings, even though results topped estimates. CEO Alex Karp twice on CNBC accused short sellers of market manipulation. Now, if you zoom out on the chart here and you take a look at Palantir's share price and you're going to accuse short sellers of market manipulation or just market manipulation in general, you better hope the market manipulation continues here, because over the last year and even year to date on Palantir, what is this stock up year to date? 135%. If I was complaining about market manipulation, one, that'd be a very, very low IQ thing to say, and also I would hope that that market manipulation would continue to the upside. So again, guys, don't get caught up in a lot of that short-term noise. Palantir, again, is doing everything that they need to fundamentally on the commercial revenue side and the government revenue side in order to continue growing their business. Now, this is a name that I outlined to all of you in the mid-teens, right around 15. This is not a name that I would necessarily want to go out and short right now, but it's definitely not one that I would want to buy at these elevated levels. Remember, guys, the smartest decision almost every single time in the market is not to buy, it's not to sell, it's not to short, it's to sit there and do nothing. Again, that's where that less trades, more profits methodology is coming from. So moving on here a little bit, let's talk a little bit about Sofi. So again, after very, very positive earnings, the overall market volatility that we were seeing dragged Sofi a bit to the downside. And taking a look at this on the weekly time frame here, again, we are just seeing a nice period of a move to the upside and a solid period of consolidation right around these all-time highs here. Then we can also take a look a little bit about institutional ownership, which isn't necessarily the most important metric in my opinion, but we are seeing quarter after quarter, except for Q1 of 2025 here, when we did see a lot of market volatility as a result of these new tariff policies coming in. But overall, over the last 12 months, we've seen $2.65 billion worth of inflows and only $1.38 billion worth of outflows here. And what you have to think about is these metrics in context. Sofi has had some absolutely unbelievable performance so far this year, and it does make sense that some of these institutions are going to be profit taking along the way because they have certain risk parameters in a lot of their portfolios that Sofi, or model portfolios that Sofi could be included into, and they do not want to get overweight on any one name. So a lot of those outflows right there could just be the result of some of this institution or fund manager rebalancing. Now, the last name that I want to talk about with you guys here is going to be Hims. So again, the performance out of this name over the month of October here has obviously not been great for Hims shareholders here. The healthcare space has been taking a little bit of a hit, especially around this period of uncertainty on whether or not we are going to be getting another rate cut in December. But we do have a potentially very positive piece of news coming in the near future for Hims here. And again, Hims & Hers said on its recent earnings call that it's in active talks with Novo Nordisk to make Wegovy available on Hims platforms. A partnership isn't certain, but Hims would gain access to Wegovy injections and Novo's upcoming oral version at manufacturer set discount. So remember, the whole kind of saga between Hims and Novo really hinges on this legal gray area that is compounding. So when we were seeing those supply chain issues with Wegovy and with Ozempic over the last few years, the regulatory authority said it was okay for companies like Hims & Hers to be offering what are called compounded versions of these GLP-1s, which is effectively like a knockoff brand. Now, once that situation was over and then they kind of started coming out and saying, nope, compounding is no longer allowed, there is a legal gray area in which if those compounded GLP-1s are custom tailored to the consumer, then they can still offer them. Now, Hims is obviously going to say, well, if that's going to generate more revenue for us, we're going to continue offering these products. And Novo Nordisk didn't really like that Hims was continuing to engage in that type of behavior. But at this point, especially with the struggles that Novo Nordisk has faced, Hims & Hers has a lot of distribution and a lot of growth. So a partnership does make sense coming in the near future here that could benefit both companies. So guys, that is going to wrap up this video here. If you guys do enjoy the information and analysis that I provide for you guys in these videos here, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot in spreading this information out to as many people who actually want to learn. And again, if you're not subscribed yet, make sure you guys are, and turn on notifications so you're notified every time these videos do end up getting posted live. And for those of you guys that are jumping into LTMP, welcome. We're gonna get you guys going in the right direction. Once you guys start going through the course curriculum videos, ask me any questions that you guys have. I'm always around to answer. But until next time, guys, I will see you. Peace.